Alright, good afternoon everybody. Steve Spencer here from SMB Capital, SMB Training. I'm going to do this video. I haven't done one of these in a long time. They used to be pretty popular, and I'm going to do a morning game plan review. It's the end of the week, and I felt like making a video. I'm not going to do a recap of the market. I'll leave that to the expert Brian Shannon over at Alpha Trends, who does a great job every Friday of kind of summing up where we are in the market overall. But as always, my expertise and the expertise of SMB, what we emphasize is making sure our traders are in the most in-play stocks each and every day. And one of the ways we do that is through our morning meeting, which is for all the traders on the desk, as well as those who subscribe to the morning meeting. So why don't I drag over what is the written summary, what I call the game plan, and that is from this morning. Gotta zoom out of that. And that is for today. This is today's game plan we're looking at right here. The way we start the morning meeting is fresh news, and I think if you look at some of these tickers right here, GILD, APKT, IDIX, WYNN, and DRIV, these were things that had fresh news today, and that was our focus, understanding that there was a strong underlying bid in the marketplace. So why don't we start firstly with GILD, and what I will do is I'll drag this a little bit over to the right here, and I will punch up GILD. Here is today's price action. And for those who follow the blog and follow my videos, you know that a point of emphasis recently has been following things on the higher time frame. What we can see right here is GILD blew out numbers, gapped up on that good earnings, drove up in the morning from 51.5 up to 53.5, and I'll zoom out a little bit so you can kind of see what the pre-market action looked like a little bit better. And you can see this consolidation range between 53 and 53.5. And if we go back to what I wrote in the morning game plan, you can see I wrote support at 53 and 53.5, which is basically the consolidation range. Resistance 54.5, 55. Positive reaction to earnings. Watching pre-market consolidation range of 53 to 53.5 to inform bias. So going back out to it, what we can see is the initial drive, consolidation, and the first good trade of the day really happened in the pre-market when it started to hold above 53.5, and it trended up about 1.5 or so. It did us the favor right before the market opened of dropping it right back out to $53 before opening in the market, and then trending right up to $54.75. The way that I traded this today was I was actually writing the game plan here, so I missed the buy here at 53, but I eventually got in after this initial drive, this pullback, and started going higher. I got in here somewhere, I don't actually remember where, but rode it all the way up to about 54.75, some of the position, and was fortunate enough to actually buy in this little wick down right here. This was probably my best little trade of the morning. I got hit here in the low 20s and was able to capture this quick up move to a new high. What then happened was this eventually started to have an intraday, a little bit of a downtrend here, and there was an opportunity to trade this a little bit on the short side. I did not. I was off the desk. But one thing you have to remember is big picture, and I'll emphasize this over and over again. Strong market, strong stock gapping up. Not really a bigger picture short unless it gets below $53 a share, and that's what we said in the morning meeting. So when it comes back, tests the 53, comes up here, consolidates, and then breaks above 53.5 again, you really need to trade this on the long side. This is probably the best trade of the day. Breaks this little mini downtrend here. Still, you know, above this consolidation area, you want to trade this on the long side. That's all I can say about that. The next one on our list for today is APKT. This turned out actually to be the stock of the day. And the way we talked about this, well, let me give you the big picture and kind of how we talked about in the morning meeting. Maybe I'll try to post this video on the blog as well. But this is one that's been in a longer term downtrend. The news came out, here's the big picture downtrend. The news came out and they released bad numbers and they guided down. Whenever I see something like that, a stock's trended down from 55 all the way to the mid-20s, that release bad numbers and then guide lower, and it's not making new lows, I say to myself, hey, maybe this news was factored in. Maybe we'll look for a gap fill. And so, and the way you do that is you actually just look at the price action, and again, it's a price action. So my experience tells me, based on this setup, it's in a longer-term downtrend. I know, based on my experience, if a company is in a long-term downtrend, gives bad earnings numbers, lowers guidance, that the logical and rational thing, if this news was unexpected, would be for it to make new lows. So I look at the initial gap down to below $27, and it's not a new low. I already showed you on the longer term it was in the low 20s on the longer term chart. The next morning we come in, okay, fine, it opens down here by yesterday's after hour low, but immediately it drives above this range here. This is really, really important. I have a thesis. The idea is that maybe this news was already factored in. What price action do I need to see to make that conclusion that news is priced in already? What I need to see is when I come in the next morning, I need to see this get above the high from the after hours yesterday, which was $28 a share. You can see that happened early on, and I'll zoom in, and what we said, and we'll go to the game plan in a second to show you what we said. Again, and this is, we're doing this analysis before the market opens. But basically what we said is, hey, if this can get above $28 a share and hold, we can look for some type of gap fill. Now it turned out, not only did it fill the gap, it consolidated up above 32 here at around 12 o'clock this afternoon, and I think this is where most people who traded on the desk traded it on this breakout here. But for me, on this situation, I like to identify it early, try to get in as early as possible. I don't trade pre-market anymore, I'm doing the morning meeting, but for traders on the desk, certainly this is where you should be looking at it. So you're in a position of strength for that initial drive up to 30 on the open, and then you have no reason the rest of the day, you're probably still long this overnight. It's a swing trade at this point. But again, checking back in with what we said on the morning game plan, support levels 26.5, 27.10, resistance 28.85 and 30. Notes, initial negative reaction to earnings, but has rallied back 1.5 points in pre-market. Trading plan was above 28 looking at long, and it's as simple as that. Why don't we move on to the next one? IDIX, support level 970, resistance 1220, 1240. Drug news, I forgot to put in my trading plan, but basically my plan was to short it around this resistance area in this 1220 to 1240. And who knows, maybe it breaks down and comes down to the longer term support at 970. Let's take a look at IDIX. IDX, we saw again, and this is a recurring theme, the better trade from a risk reward standpoint they're happening in the pre-market, and basically what we saw here was, actually I'll just show you, here's a 10-day on this, and I'll show you why there was another great pre-market trade. This area here, there was some resistance up here in the 1420 to 1440 area. If we go to today's pre-market, you can see that they opened it up right here at that longer term resistance. They gapped it up there. And you don't know right off the bat if it's going to come off, but of course what it did was it did come off from there. And so if you got in early today and you felt like there was enough volume, this is a very clean downtrend after it topped out at the longer term resistance in the pre-market, and it was very, very steady. For me, I want to be in a position of strength. If I can, once this tops out above 1420 and starts trending lower, if I can get in here below 14 maybe, or below 1380, you can see it's very methodical. Even if we go to the 1 minute, maybe we can see what that looked like in the pre-market. I'll just go to today's chart. So you can see kind of here what it looked like in the pre-market. It was pretty steady. I don't know what the spread looked like. Again, I was preparing for the morning meeting. But if I can get here in the pre-market up here, more comfortable when the market opens and it's down in the 12s in terms of having to risk. But the levels we highlighted, I think it was 1220 to 1240. So this is kind of the area that I was looking to get short here. I didn't actually trade it on the open, but if I did, I probably would have been looking to short here and probably stopped out into this move. And the question really would have been, could I get back in when it came back, when it topped out here and came back? Probably the spot I would be looking to get in would probably be around here when it finally gets consolidating below 1220 a share. I know later in the day people were shorting it at around the 1160 area, and that's fine. My only issue with the 1160 was I thought from a longer term perspective there's recently been some support there. But it did consolidate very tightly below that right here, and very easily could have broken down and got to new lows. So we'll watch that one on Monday to possibly take out this 1160, then 1130. Next longer term support is in the 9s. I'm going to do one more. It's kind of getting late, and this video is probably getting long. WYN is WYNN is a very difficult stock, only for very experienced traders. I normally wouldn't even talk about it in the morning meeting, but this level on the 15-minute for the last 5 days jumped out at me. This 116, it'd been moving nicely, at least this day right here on February 1st, pulled back to this 116, rallied up to 118.5. Yesterday, in the after hours, came down to 116 before popping back up to 118. So seeing this weakness on the earnings, I thought, you know what? If it got below 116 and consolidated below, I thought it was worth guys on the desk taking a look at it. And so I said it. And some guys did try to make the trade, and quite frankly, it actually looked pretty good to them. If we zoom in on it, on today's action, I'll show you what happened. I don't think anyone really ended up making money on it. I think people lost money. But basically, it came off below 116 and it started to hold below there. And when it came back up, I think this was... So this is where people looked to short it right here. So it showed the weakness from 117.5 down to 114.50. We were very cautious in the first 15 minutes. We really haven't been trading that much. So people wanted to see the weakness and short it on the retracement, and a bunch of people did it. They noticed it kept on popping above 116 but not holding. And so they started shorting, and it started holding a little bit lower at 115.80, and probably 3 or 4 people were shorted, more advanced stock and very wicky, and they thought they were in the driver's seat. You know, came back, failed here, failed a little bit lower, failed a little bit lower. The one thing you can see though is there definitely was buying at 115.20, and you know, every time it went below, it would close above. Go below, close above. Even if we go to the 5-minute, you can probably see that even better. On the 5-minute, it would go below, close above. And finally, that happened one more time here, got below 115. I even talked about this G-Man. He actually said he had added to his position here, and then immediately, boom, right back above, and that became a losing trade. And I think everybody else was stopped out on this move here. Later in the day, it eventually did trade lower after one more time coming back up to 116. The 8th time was the charm. I think DP got into it on that final move. He made some of the money back. You can see he came up to 116, held again, came off about 1.5 points. So I think he made some money back on that. But overall, wasn't particularly clean, but it did show such an important level. We thought if it consolidated below there that there might be a good short. But I think we hit the nail on the head on the first 2 stocks on GILD and APKT. Those were the first 2 we discussed. I think the levels we highlighted were important. The theses were right. And ultimately, though, the job of making money is up to the trader and their skill level and following through and staying with the trend. If you tend to fight the bigger picture trend and you don't get in at the good prices, you struggle. And then those are the things that we emphasize. And also trading the stocks that are right for your skill level. The stocks that I've been talking about today, these are advanced stocks, with the exception of IDIX. They can really move. Even in APKT, that with a lot of volume, there's some risk there. So if you're less experienced, you want to be careful on those wider spread, higher price stocks. So anyway, thanks for joining us on this recap, and should be posted on the blog shortly.